Hey, Saretsky here. Welcome back to the show. I put a video out last week that talked about real estate developers, and in particular here in Vancouver, how we're going through that insolvency phase. It takes time for developers that are going bankrupt or, foreclosing on us on a development site. It takes time for that process to play out, right? It's a year or more long process of going through the court system, the litigation, et cetera, et cetera. So we're seeing the pig pass through the python slowly but surely. And it's funny, I was reading an article this week from the Vancouver Sun, which actually ended up highlighting that. So I'm going to pull some interesting quotes here from that article, which goes in addition to the video that I put out last week. But it says, Beau Jarvis, president of West Group Properties, big developer here in Vancouver, keeps a running list of Vancouver development site foreclosures, court-ordered sales, and receiverships, which he estimates could total close to 7,000 homes across dozens of different projects at his last count. He's also tallied another 3,000 or so homes in several Metro Vancouver residential products that have been put on hold, some of them from established development companies, including his own. And then it goes on to sort of add additional commentary from a guy named Alan Friedland. He's a lawyer with Vancouver firm Owen Bird, which specializes in commercial foreclosures. He's seen upticks in foreclosures over his 4-decade career, but says the past year or so in Vancouver has been the busiest in terms of big real estate insolvencies that at any time since the early 1980s, including the 2007-2008 financial crisis. So this guy's saying, listen, this is the worst I've seen it in my 40-year career going back to the 1980s. And, for most people that are kind of looking at this, or you're looking at, the residential market seems to be doing just fine. We're not really seeing that many foreclosures. You're not really reading too much about it in the media. But like I said, it's happening behind the scenes, and these guys are seeing the paperwork and the litigation that's coming through. And like I said, it's only going to be, in my opinion, a matter of time until some of these bigger names are you going to see them in the paper, and that might be 6 months from now, it might be 12 months from now. This is happening, and it's going to happen regardless of whether or not the Bank of Canada cuts rates, 25 basis points or, 100 basis points this year. Again, because these are already happening. These loans are already delinquent, right? Like what happens basically is, some of these highly levered, particularly small, medium-sized developers, highly levered, you've got development land values that have dropped, right? Because projects are no longer feasible, land prices have to come down. So the development sites are worth less money. And then the cost of the interest rate has gone way up. And so when you come up for renewal on your loan, the lender says, okay, well, we might renew you, but, the value of your property's dropped. We think there's more risk in the market. So, capital call, you need to inject more capital into this deal before we issue a loan on, right? Like we're not going to issue a land loan at, 80% loan to value. We might do it at, say, 50%. So you need to come up with, whatever it is, $3 million, $5 million, $10 million cash. And there's just not enough. There's no cash. There's no cash to be able, to come up with these deals. And so they basically they are not able to refinance or re-extend their loans, and they basically end up in a litigation foreclosure process. And that's what's happening. And like I said, that takes time. And I think, so like I said, I think we're going through this insolvency phase. I think we're starting to finally see it in the data. More and more anecdotes are coming out. You look at even, the consumer, right? Retail spending's been flat. You look at retail insolvencies. I mean, they're running at levels we haven't seen in a very, very long time. And so again, I think it feels like the interest rates are starting to bite, at the household level, right? Everyone's just kind of pulling back. And, we've got a precursor in Canada's Q1 GDP, right? I mean, we're projecting here for a 7th consecutive quarterly contraction on a real GDP per capita basis. So basically, on a per capita basis, we've been in a recession for almost 2 full years. It's almost been 2 full years. And you wonder why, the polls on the Liberal government are down in the dumps. It's because, again, just because the official stats tell you you're not in a recession, for most people, for a lot of households, prices are way up, things are unaffordable, and these are recessionary type of conditions. And so people are naturally upset, frustrated, and pissed off. And so that kind of takes us into the next phase, right? The resale market's kind of holding up. And, I always like to give you sort of anecdotes, what I'm doing in my business. Again, we won one of the more successful real estate teams here in Greater Vancouver. So I get a lot of phone calls. You're talking about home buyers, home sellers on a daily basis. And one of the most common things that I'm getting today is there's weakness in the condo market, okay? So the single-family market's holding up just fine. We're seeing a weakness, particularly in the condo market. And what we're seeing is people are saying, well, I'm going to list it here. My neighbor sold for that, 12, 18 months ago. This is kind of the price I want. I give my suggestion of where I think they actually should be if they want to sell. But, everybody likes to try their price first. It's just human nature, right? Everybody always thinks their place is worth a bit more. So you start there. You sit on the market for 3 or 4 weeks. You then look at doing a price reduction. Seller only wants to do a small price reduction. Nobody wants to, again, drop their pants before they have to. And so it just takes a long time for that to sort of play out. And what we're seeing is because places are taking longer to sell, inventory is slowly starting to accumulate. As of right now, we have inventory levels in Greater Vancouver. They suddenly kind of jumped. They've suddenly jumped. We're now at inventory levels at the highest levels we've seen. I mean, again, they're not like at outrageous levels, but they're the highest levels since October 2020. So we're now finally starting to accumulate inventory. And I think this is predominantly because of the investor base, right? Again, people are setting their prices high. No one really wants to drop their price too much. It sits on the market. People are saying, well, hold on a minute. My neighbor told me a rate cut from the Bank of Canada is coming in June. That's going to restoke the housing market. We're going to be off to the races once again. I should just hold out. And that's like the predominant conversation that I'm having. And like I said, things are just taking longer to sell. They're accumulating. And then you hear the conversation of, oh, well, if I don't get this price, if it doesn't move, instead of reducing my price like I actually have to move this product, I'll just put it on the rental market. And so everyone has this idea that we're just going to put it on the rental market. And so we're now starting to see, and we can see that the rental market is ultimately, in my opinion, the rent prices have peaked, right? The rent prices have peaked. And I think this coincides with what we're going to see now moving forward is we've got some issues here on the immigration side. So the federal government, right, has come out and says, listen, 1.2 million people a year coming into this country. There's too many. We're going to introduce all these caps on foreign students, temporary workers. We're going to bring immigration. Population growth is going to drop down to about 300,000, assuming the federal government follows through. So you're going to go from 1.2 to 300,000. And at a time when you've got a lot of rental housing that's actually in the pipeline that is going to be getting built. Again, this is a great chart here from my friend Ben Rabideau, which shows that rental units under construction as a share of the total rental stock in BC, right? Like, we've got a lot of rental housing that's under construction coming on at a time when the economy is slowing and when population growth is going to pull back. So you can imagine a scenario where, again, some of these investors at these interest rates today, they are predominantly negative cash flow. And so how long are you going to hold a negative cash flowing asset as more rental units are coming onto the market, as immigration slows, as the economy kind of withers around? It's a bad idea, in my honest opinion. It's a bad idea. And people, the way the rental tenancy laws are set up in BC is like, if you put a tenant in there, so let's say you don't sell, you're unsuccessful in selling, you're frustrated, I'm going to put a tenant into my unit for 1 year, because in 1 year, the housing market is going to be back and I'm going to get the price that I want. So you're going to put a tenant in your property, you're going to collect your $3,000 a month in rent. And then because the rental laws in BC are so strict, when you go to sell, you're forced to sell it with the tenant in there. Unless they voluntarily leave, which none of them do, you're now selling a tenant-occupied property, which means it's probably going to be hard to show. It's probably not going to show that well because the tenant is typically messier. It's not really staged. It's not their home. They don't even want it to sell. So why would they bother cleaning it up and making it look good? So when you go to sell, you collected $3,000 a month for the last 12 months. But when you go to sell it, you just left $30,000, $40,000 on the table. because your place doesn't show that well as if it was owner occupied or vacant and staged. And so you've just negated the entire benefit of having it rented out for the past month and collecting those rental checks. And so this is the biggest mistake I can say that I think people are making today. And what we're continuing to see, again, as these units that are under construction, as they're completing, more investors are saying, okay, I bought this pre-sale 3.5 years ago. Initially, I was thinking maybe I'd hold on to it, rent it out for a few years, then maybe sell it. I'm running the numbers today. I barely qualify for the mortgage. And when I do, I'm losing $700, $800, $1,200 a month negative cash flow because the mortgage rate's no longer 1.8%, it's 5.2%, and this is what the math looks like. And so you're seeing more and more people saying, okay, well, I can't hold it as a rental property, I gotta put it on the market. And that's why we're seeing we're starting to see a jump in listings. And so I think what's kind of helped the market out over the last year and a half has been really a very minuscule number of listings. For like half of last year, we had new listings running at like 20-year lows. People for whatever reason, people were just not listing last year. They're like, don't like the market conditions, don't want to move, just going to stay put. So new listings basically just crashed 20-year lows. They've been kind of muddling along this year, running low. All of a sudden here in April, we see this, 46% spike on a year-over-year basis. So again, it's 1 month. I'm not going to draw a trend line and say this is the new normal. It's 1 month. Let's wait and see how the data comes out for May and for June before we make conclusions. And no, this has nothing to do with the capital gains announcement from the feds where everyone's dumping their properties onto the market. The capital gains inclusion rate was increased at the budget on April 16th. Okay, April 16th, it takes, so even if you picked up the phone on April 16th, you called the realtor and says, let's list this thing right now, I don't want to pay any more capital gains. It takes about a week to get a listing on the market, right? You got to take the photos, you got to do the floor plan, you got to get the marketing done, you got to then, go through and get it on the MLS, get it approved. It takes about a week to get on the market. So if you add on April 16th, add on a week, it gives you about 4 business days of listing data. So no, the capital gains is not the reason. No, the Airbnb restrictions are not the reason why listings are suddenly increasing. I think it's just a function of we had some pent-up sellers, right? Again, listings running at 20-year lows, not really that sustainable. So again, we're starting to finally see, I think, potentially a shift in the market. There could be some opportunities, I think, developing maybe this summer. But yeah, this is worth monitoring. Like I said, I think on the big risk of the market right now is on the development side and on the investor side. I think a lot more listings coming to market because these properties are no longer cash flow. And as people renew their mortgages, right? Close to 50% of people still haven't seen a mortgage payment increase. As they renew those mortgages, they're going to be seeing more and more negative cash flowing units. So unless rates get down fast, I think we're going to see more inventory piling up, at least on the investor side, which is predominantly, in my opinion, in the condo market. The single family market, people buying $3 million houses in Vancouver aren't really impacted by what's going on with rates and, for the most part, the economy. So that's kind of what I got this week. That's what I'm following. Again, I think we're going through that insolvency phase, and I think the investors are ultimately adding to more volatility and more issues developing in parts of the condo market. So, as always, hope that helped. See you next week.